Kevin, let's start off with stablecoins. So this has been a huge topic of conversation recently. We saw Luna that was $60 billion at its peak that turned into a failure. So what can we do with the stablecoin ecosystem to continue to evolve it and ensure something like this doesn't happen again?
Yeah, it's a great question and very timely given the last 10 days in this space. I would answer it this way from the investment perspective. The promise for what a stablecoin could be is so tremendous and such a huge opportunity that it's okay to experiment with different structures. And so it's also all right for one to go to zero because we're so nascent in this and we're trying these new ideas, and this was one that didn't work. So maybe going forward, using algorithms may not be as popular as perhaps an asset-based stablecoin. But I look at it this way. Let's say I do this. Let's say I'm indexing for Europe right now, and I'm putting an index together. I'm an indexer, so we service sovereign and pension plans, and there's many people that do what I do. And let's say you're a sovereign fund and you're bringing in 250 million US cash a day because you're an oil magnet or you're an oil country. You want to index that into the S&P, X oil, X airlines. We do that. We get paid for that. So we see fund flows every day. Stable coins could be a huge tool for us. Think about it this way. I want to buy Nestle on the Zurich exchange. I have to take US dollars out of New York. I have to send them over to Zurich, ACH, 3 days. There's other ways to wire it, but if you're going to go bank to bank, there's a know your customer basis. It takes time. It can be done in 12 hours, but there's a lot of fees involved. Then I have to convert it into Swiss francs to trade it. I get clipped for 2, 3, 4, 5 bips on that, no value added. If I had a stable coin that both regulators agreed was a currency in a payment system, I could do that in 2 seconds at a fraction of the cost, buy whatever I want to buy, and then send it back the same way. That's worth $1 trillion. That's how big the FX market is in a quarter. Just the fees in that. Now, with that potential, I would love to see some policy, either the Haggerty bill, which I read, the Toomey bill, which I read. Both of those make a lot of sense to me, and get some policy around this so I could use it as a tool institutionally.
Yeah, absolutely. And, speaking of that, you've been meeting with a lot of political leaders in North Dakota and other areas, and I know there's other rural areas that have been overlooked for technology advancement. Yeah. As we see the evolution of the mining opportunity for the digital asset ecosystem, building this critical infrastructure, how can these rural states leverage this to take advantage of bringing economic development and prosperity?
Yeah, the mining space is in chaos right now because of ESG concerns. There's no other way to put it. The market capitalizations of the public miners, which used to be a proxy to the price of Bitcoin, a way for institutions to invest. You could buy a basket of these public miners. That proxy is gone. The stocks are down 60, 80%, whatever, and they won't be coming back until we resolve this ESG issue. New York is a highlight of that. They're considering, canceling proof of work. That would be a bad outcome for New York. That's not a good idea, but it's frozen capital because New York, Tennessee Valley, Montana, North Dakota are ideal locations where you could put mining facilities under full mandate of hydroelectricity, where you wouldn't need a carbon audit. And I think for miners and data centers, that's a huge opportunity. Turkey Point has just been recommissioned by Biden. That's a nuclear power facility in Florida. A lot of interest in that facility for providing power for data centers. It's not just Bitcoin mining we're talking about here. The best outcome for stabilizing a data center is to lease it to miners during the period of stabilization and then convert it to a long-term lease with a Tesla, an Amazon, Microsoft. But all of those giant behemoths, including the state governments, want clean, zero-carbon, ESG-compliant, Larry Fink-proof data centers. That's what they want.
Yeah. And as we continue to build out this digital asset infrastructure in the mining sector, there's a lot of people that think there's the opportunity here where this becomes a benefit for national security, a benefit for energy evolution, and creating true renewable innovation in the space. How do you think that we integrate these energy opportunities into the everyday business needs of these utility providers?
Well, assuming, proof of work remains, and I think it will, I really do. We have to, in every generation of chip, make them more efficient, make them more energy efficient, throw off less heat, for example, and that the capital available. I mean, you think about a facility like the one I'm involved in Norway, which is using excess hydropower. So instead of it going over the dam and never being returned into the economy, we're capturing it in the form of a data center that's mining Bitcoin right now. We pay tax, we support the community, we're building out 300 megawatts there, and we are using power that is not being used. There's many use cases, but at the same time, we're trying to find the very best and most efficient and productive way to mine that coin. And the halving's coming, so we have to even get better at it. And so that's forcing the industry to do a much better job on technology, but also figuring out a way to support communities. The stacks in Norway heat hydroponic tomato stacks, and a cannery's been built beside it by the Bitcoin miner there, so it's become part of the community. And we're not at war with the local government because we're part of the local government. They're a shareholder in it. And I think that's the new way to build these data centers and these mining facilities, is figuring out jurisdictions that are pro-energy, and if it's nuclear power or if it's hydro, it's great. United Arab Emirates building a massive data center around a nuclear power plant. Upstate Quebec used to be upstate New York, no longer. That's their problem, but it's a shame that they're not taking advantage of what they have.
Yeah, that's a great point. Now, I want to shift gears a little bit now and kind of move over to regulation. So I've heard you talk a lot about the opportunity to create thoughtful regulation in the digital asset space, and I would love to learn from your perspective, how can the United States become a leader in blockchain?
Well, a lot of people don't want regulation, but let me make the base case for why everybody in this room wants it. Let's just take the granddaddy asset, Bitcoin, okay? Let's just start there. You may be excited that it's at 800 billion market cap. That is absolutely a nothing burger in the context of financial services. It is a rounding error because the majority of wealth in the world is managed by sovereign wealth and pension plans, both stateside and around the world. 100 billion, 200 billion, $1 trillion mandates that do not own a single Bitcoin, not one. So for all the excitement that we have in these conferences, and this is very important to discuss, it is so nascent, it is not even on the radar of these asset allocators. And they're not going to put it on the radar until it gets cleared by the SEC in one way or another, because the majority of their wealth is indexed into the S&P, the largest market on earth. And if you don't have access to that because you're somehow rogue, it's not worth buying Bitcoin. It's not worth buying Bitcoin at all because it's a tiny fraction of what they're trying to manage. Now, if we could get regulation, and I would argue if we could just regulate one coin at the beginning, let it be Bitcoin, and one stable coin, that would be fantastic. But staying on Bitcoin, here's what would happen. I'm an indexer. I asked the sovereign wealth, what allocation would you put into Bitcoin? And the typical mandate for those guys, we have 11 sectors of the S&P. Their rules are long only, no more than 20% in any one sector, no more than 5% in any one stock. So they may initiate their index of Bitcoin at 50 basis points. When you're running $1 trillion mandate, that is a ton of money. And so all of a sudden the demand for that asset, Bitcoin, becomes higher, the price goes up, but it gets better. If they bought it at, let's say, $30,000, and their mandate is they're going to be a 50%, or let's say 1% weighting, and it goes to a 2% weighting, within 90 days they sell it back down to 1%. Or if it drops, they buy it back up. They are the eternal bid for the asset. And all of a sudden the stability of Bitcoin, instead of having 50% swings every 12 months or more, that's gone forever because there's an underlying multi-trillion-dollar bid for the asset. Now, I don't know why there's a single person in this room that wouldn't want that. So I encourage Lummis, and I encourage Haggerty, and I encourage Toomey, all of these regulators, let's get going here because the rest of the world is far advanced. Canadians already have an ETF in Bitcoin. They already have an Ethereum ETF. The Swiss have already licensed a dealer broker attached to a crypto exchange. So is Canada. The UAE is doing the same thing with the ADGM. I run around the world trying to find places to put money to work. It's everywhere else except the United States. What's wrong with this picture? It's broken. We got to fix it. And I know there's a lot of other political agenda on before the midterms, and I'm sure Biden isn't sitting there saying, I wonder what Kevin O'Leary thinks about regulation on Bitcoin. I mean, he doesn't care because he's got a lot of other issues, but we got to get this dealt with on the other side of the midterms.
I agree. And I think as we continue to get these regulations dealt with, we're going to see huge institutional inflows of capital. And we're already seeing that today. There's more institutional adoption and interest than ever before in the crypto space. And you've even noted before that you think that crypto will be the 12th sector of the S&P. Why do you think that?
Because of the productivity. You think about the number one sector of all sectors, the grandfather, it's currency and it's financial services. No economy can operate without it. The productivity enhancement tools that are available now as you contemplate higher speed transactions, what Polygon is doing, aggregating on top of Ethereum, figuring out all these things, all these incredible teams. And I look at it, I've said this countless times, but it's so apropos right now. Bitcoin is not a coin. It's software. Ethereum is software. Solana is software. Helium is software. Pollen is software. These are all software projects. The amount of intellectual capital going into these projects, these are the smartest coders in the world. They don't want to go work in any of the other 11 sectors right now. You graduate from Waterloo, you graduate from MIT, you come out of Temple, and you're a coder, you're going one way to blockchain. That's where you want to be. Now, when you get that much intellectual capital working on something, and I'm an investor, I got to wet my beak. Are you kidding? I know there's going to be incredible outcomes. I just don't know which ones. So I'm spread across 32 positions right now. I'm sure the majority won't work, but I only need a few. I mean, I own these things at their nascent beginnings, and I'm hoping that some of these ideas work out. And we haven't even touched on NFTs yet. I mean, there's so much going on here that you've got to spread your bets. You can't just be a big chunk of Bitcoin, a big chunk of Ethereum. And you know that. You've done it very successfully. You've got the best performance record of any hedge fund. I mean, that's good work.
I appreciate that. It's so funny, though, because it's the traditional Warren Buffett strategy that has allowed us to, perform well over time.
Well, you're opportunistic, too.
Absolutely.
I get it.
So in this line of thinking with investment, you used to be very against crypto, and then there was a turning point where I think you really had this light bulb moment where you're like, okay, this is happening and there's nothing stopping it. Why is this such an amazing investment opportunity today?
My turning point, and I get that Pomp video shoved in my you-know-what every day from the CNBC interview. Every day. He never lets me forget. But the turning point for me was getting a call from one of the analysts I work with that watches the OSC in Canada, where we have a lot of investments, saying they're going to license the world's first crypto exchange attached to a dealer broker. And that just said, whoa. I mean, that's a game changer. A lot of people don't understand what that means, but what it means is that every Canadian citizen in every province can open an account, transfer fiat currency, Canadian dollars, into it, and be completely 100% compliant on their own crypto exchange. And they granted that in an order from the OSC. That changed everything for me. I said, okay, what's going to happen next? And within weeks, the very first ETF was launched on the Toronto Stock Exchange. Then the Ethereum ETF raised $5 billion in something like 48 trading hours. So that's the beginning, and then I saw the Swiss, then I saw what happened in London, then the ADGM in UAE. It's all happening, moving forward, and nothing's happening here. It's a very strange, eerie situation that the US wouldn't lead on policy. And now I think with these senators you've seen here today and other policymakers coming, they get the joke. And I think as an industry, we've got to feed them as much information as we can to get it right, because a lot of this code, there's something very wrong when the brightest minds out of MIT or Stanford are living on a Caribbean island. What is that? Like, what does that tell you? That tells you that we don't have the infrastructure here on policy to bring these geniuses back on our soil and all the jobs and wealth they're creating. That's just wrong. It's 100% wrong, and we got to fix it. If you like that video, wait till you see my next one. Don't forget to click right over here and subscribe.